Hi everyone, I'm Joel Carty from Solace Financial. Welcome to our investment and economic snapshot for May 2026. May was another strong month for global share markets, with investors encouraged by solid company earnings, ongoing investment in artificial intelligence, and hopes that geopolitical tensions in the Middle East may continue to ease. However, while markets performed well, there are still several important economic developments that investors should be paying attention to. Let's take a look at what happened during the month. Global equities delivered strong returns in May. The US market led the way, with the S&P 500 gaining more than 5% for the month. Much of this growth was driven by large technology companies, often referred to as the Magnificent Seven, which continue to benefit from significant investment in artificial intelligence and digital infrastructure. Japanese shares also performed exceptionally well, rising almost 12%, while emerging markets gained close to 10%, supported by strong performance from the semiconductor manufacturers such as TSMC and Samsung. Overall, investors remained focused on company earnings and long-term growth opportunities, particularly in the technology-related sectors. While Australian shares finished the month in positive territory, they underperformed many overseas markets. The key reason was uncertainty following the federal budget and concerns around the proposed changes to capital gains and negative gearing. Major banks came under pressure as investors reassessed what these changes could mean for housing activity and future credit growth. On a more positive note, the resources sector performed strongly, supported by higher commodity prices, while smaller companies continued to outperform larger businesses. One of the major themes for May was inflation. Higher oil prices in the year continued to flow through to consumer prices around the world. In the United States, inflation increased to 3.8%, while similar pressures were seen across Europe and Australia. As a result, central banks remained cautious. The Reserve Bank in Australia increased the cash rate to 4.35% during May and continues to signal that inflation remains its primary concern. Markets are currently expecting interest rates to remain higher for longer than many investors anticipated earlier in the year. The outlook for interest rates also affected bond markets. Government bond yields remained elevated as investors adjusted expectations around future central bank policy. The Australian 10-year government bond yield finished the month just below 5%, while US bond yields also moved higher. This environment creates challenges for both borrowers and investors, but it provides opportunities for those seeking higher levels of income from fixed interest investments. One of the most significant domestic developments was the federal budget. The proposed changes to capital gains tax and negative gearing have generated considerable discussion amongst property investors and investors alike. If implemented in its current form, these changes could alter the attractiveness of investment property and other long-term growth assets. While the legislation is still subject to Senate approval, it is something we are monitoring closely as it could have a meaningful implication for investment strategies and retirement planning. The global outlook has improved in recent months, particularly as geopolitical tensions have eased and investors have refocused on business fundamentals rather than just headlines. While there will always be challenges and periods of volatility, successful investing is about maintaining perspective and remaining focused on long-term goals. If you'd like to discuss your investment strategy, retirement planning, or how current market conditions can affect your financial position, we're here to help. Feel free to reach out to me via our website or give our office a call. Thanks for watching, and we'll see you next month.